Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Syafiq bin Abdul GHANI. I am going to present about fundamental of financial reporting ACC 2673 for assignment presentation. Me and my another friends Haiqal bin AZUAN are going to present about financial reporting assignment. Introduction of the selected MFRS. Introduction for Property, Plant and Equipment. MFRS 116 are tangible assets held for use in the production or supply of products and services for renters or to others for of administrative purpose and are intended to be used over a period of time. However, PPA categorized as held for sale. IFRS 5 investment properties accounted for using fair values. Biological assets relating agricultural activities and exploration and evaluation assets are not covered by MFRS. The standard's goal is to establish an accounting standard for property, plant and equipment as well as changes in such as investment. The recognition of assets, the assessment of their carrying amount and the depreciation changes and impairment losses to be reported in the relation to them are the remain constant in PPA accounting policy. Introduction for intangible asset MFRS 138. Intangible assets include goodwill, brand awareness, and intellectual property like as patents, trademarks, and copyrights. Tangible assets such as lands, vehicles, and equipment and inventories compete with intangible assets. Financial assets such as stocks and bonds are also considered tangible assets because their value is derived from contractual claims. There are two types of intangible assets: indeterminate and definite, because it stays with the firm for as long as it operates. A formal agreement to operate under another company's patent with no plans, no prolong. The agreement is an example of a definite intangible asset. As a result, the contract has a finite lifespan and is classified as a definite asset. It can be extremely valuable to a company and crucial to its long-term success. Coca-Cola, for example, would not be nearly as successful if we are not for the money generated by brand recognition. Despite the fact that brand recognition is not a tangible asset that can be seen or touched, it can have a significant impact on sales. Sapura Resources Berhad, MFRS 116 and MFRS 138. Presentation on property, plant and equipment and intangible assets. Property, plant and equipment. When events or changes in circumstances suggest that the carrying value of property, plant and equipment may not be recoverable, the carrying value is assessed for impairment when an item of property, plant or equipment is disposed of or when no future economic benefits are predicted from its use or disposal. It is derecognized. Any gain or loss resulting from the assets derecognition is included in the profit or loss for the year in which the asset is derecognized. For intangible asset, separately purchased intangible assets are first valued at cost. Intangible assets acquired in a business combination are valued at their fair market value at the time of purchase. Intangible assets are valued at cost loss any accrued amortization and impairment loss after initial acquisition. Derecognition gains or loss are calculated as the difference between the net disposal revenue and the carrying amount of the asset, and are included in profit or loss when the asset is deregistered. Measurement for property, plant and equipment and intangible asset. Property, plant and equipment. The cost of all property, plant and equipment is initially documented. The cost of an item of property, plant and equipment is recognized as an asset if and only if future economic benefits connected with the item are likely to accrue to the group and the cost of the item can be reliably determined. Intangible asset. Separately purchased intangible assets are first valued at their purchase price. Intangible assets with finite useful lives are amortized over their anticipated useful lives and examined for impairment whenever there is a possibility of impairment. At the very least, at the conclusion of each financial year, the amortization term and the technique are evaluated. Recognition for property, plant and equipment and intangible asset. For property, plant and equipment, property, plant and equipment are measured at cost less accumulated depreciation and accumulated impairment loss after recognition. When major components of property, plant and equipment must be replaced at regular intervals and the group and the company treat them as independent assets with particular useful lifetimes and depreciation. Similarly, if the recognition conditions are met, the cost of a major inspection is recognized in the carrying amount of the property, plant, and equipment as a replacement. All other repair and maintenance expenditures are recorded when they are incurred in profit or loss. For intangible assets, changes in the assets' estimated usable life or expected pattern of consumption of future economic benefits are accounted for by adjusting the amortization period or method as appropriate and are recognized as changes in accounting estimations. Profit or loss accounts for the amortization aspects on intangible assets with definite lifetime. Disclosure for property, plant, and equipment and intangible assets. For property, plant, and equipment, other property, plant, and equipment depreciation is calculated on a straight line basis over the asset's anticipated useful lifetimes. At the conclusion of each year, the residual value, usable life, and depreciation method are reviewed and, if necessary, changed prospectively. For intangible assets, annually or more frequently, if events and circumstances suggest that the current value may be impaired, either individually or at the cash generating unit level. Intangible assets with indefinite useful life or not yet available for use or are evaluated for impairment. The value of intangible asset is not depreciated annually. The useful life of an intangible asset with an indefinite useful life is assessed to see if the useful life evaluation is still valid. If it is not in the case, the useful life is changed from indefinite to finite on a prospective basis.
Hello, I'm Haiqal. I want to present about 7-Eleven Malaysia. 7-Eleven Malaysia Holdings Berhad MFRS 116 and MFRS 138. Presentation on for property, plant, equipment, and intangible assets. Property, plant, and equipment. The cost of property is initially documented only when it is likely if future economic advantage associated with the item will flow to the group, and the cost of item can be determined reliably as subsequent costs included in an asset's carrying amount or recognized as a distinct asset as appropriate. The replaced parts carrying amount is not recognized. All other repairs and maintenance are deducted from profit or loss in the financial period in which they occur. Intangible assets. Goodwill is an intangible asset connected with the execution of a business by another. Goodwill is defined as the portion of the purchase price that is greater than the total of the net value of all assets acquired and liabilities assumed in the transaction. Goodwill exists for a variety of reasons, including the value of a company's brand name, a strong client base, good customer relations, good employee relations, and the property technologies. Valuation reserve. Valuation deficit is in recorded the statement income statement. Measurement for property, plant, and equipment and tangible assets. Property, plant, and equipment at the time of valuation. Land and buildings are valued at fair value less accumulated depreciation and accumulated impairment losses. Valuation are complete frequently enough to guarantee that a revalued assets carrying amount does not differ considerably. Intangible asset. At first, cost is used to gauge goodwill by comparing the carrying amount to cash generating unit, including the allocated goodwill, with the recoverable amount cash generating unit. The cash generating unit to which goodwill has been allocated is tested of impairment annually, and whenever there is an indication that the cash generating unit may be impaired. An impairment loss is recognized in profit or loss when the recoverable amount of the cash generating unit is less than the carrying value. In succeeding quarters, impairment losses for goodwill are not reversed. Recognition for property, plant, and equipment, intangible property. In the plant equipment, except for land and properties and any accumulated impairment losses, all items of property, plant, and equipment are stated at cost less acquired depreciation after recognition. In other comprehension income, a valuation surplus is recognized and credited to the asset valuation reserve in equity. However, the increase is recognized in profit or loss to extend the revaluation deficit of the same asset, except to the extent if the offset is existing surplus on the asset recognized in the asset. Assets. Goodwill is evaluated at costless accumulated impairment loss after initial recognition. Goodwill purchase is recorded from the acquisition debt forward to each of the group cash-generating entities and the project to be benefit from the combination synergies for the purpose of impairment testing. Disclosure for property, plant and equipment and intangible assets. Property, plant and equipment. Because freehold land has an infinite useful life, it is not depreciated. Capital work in progress is not depreciated because it is not yet ready for use. Other property, plant and equipment are depreciated in a straight line fashion throughout their anticipated useful lifetime. Intangible assets, when goodwill is part of a cash generating unit and a portion of the cash generating unit's operation is disposed of, the goodwill associated with the disposal of operation is included the operation carrying amount when calculating the gain or loss in the person. The respective fair value of the operation disposed of the fraction of the cash generating unit maintained are used to calculate the goodwill disposed of in this situation. MFRS BS Empress Intangible Assets MFRS 1.3 and embrace the code recognition criteria include a probability recognition criteria, the standard max and assumption that's for all research and development expenditure, and all internally generated intellectual property. The probability recognition is not met. The expedition incurred should be recognized as an expenses. MFRS 138 development expenditure of R&D activities that meets the recognition criteria must be capitalized. All research and development expenditure are recognized as an expenses. Internally generated intellectual property shall not be recognized as an asset. Property, plant and equipment MFRS 1.6 MPRS applies a components approach to separately recognize and account for each significant part of an item of PPE. Initial measurement is at cost. Adjustment principal or subsequent expenditure is not relevant. Each significant replacement is a new component of an item PPE. Subsequent measurement is at cost a revalued amount less accumulated depreciation and accumulated impairment losses. MFRS 116 applies a component approach to separately recognize and account for each significant part of an item of PPE. Initial measurement is at cost. Adjustment principle of a subsequent expenditure is not relevant. Each significant replacement is a new component for an item of PPE. Subsequent measurement, a policy choice by class to measure PPE at 1. The requisite cost of model, 2. The requisite valuation model. Tangible assets held for use in the production or supply of product and service, for rental to others, or for administrative purpose, and are intended to be used over a period of time. MFRS 138 is a non-physical asset. Is the refer to an intangible asset. Intangible asset include goodwill, brand awareness, and intellectual property like as patents, trademark, and copyrights. Tangible assets such as land, vehicles, equipment, and inventories compete with intangible assets. Goodwill is an intangible asset connected with the execution of a business by another. Goodwill is defined as the portion of the purchase price that is greater than the total of net fair value of all assets acquired and liability assumed in the transaction. Goodwill is intangible asset connected with the execution of a business by another. Goodwill is defined as the portion of the purchase price that is greater than a total of the net fair value of all assets acquired and liabilities assumed in the transaction. Both companies are using a plant, property, and equipment based on the information has given.